it impressively demonstrates the trust customers are putting in us, and also that Siemens is a reliable partner also in difficult times. So basic thing is that we have a portfolio which supports our customers in their digital transformation, giving them higher productivity, shortening the time to market, but also increasing reliability and sustainability. And give you one example. BioNTech, for example, is one of our customers, and we help them ramping up their production fast. So lead time is absolutely important, as you can imagine. And so we saw a very, very good pull for our portfolio. And we call that technology with purpose, so doing more with less. And that's really a demand which we see in the market, across all markets. And this really supported us in our growth.
You're also saying that the margins are developing very well. Is that also because you can realize higher prices at your end customers?
Well, if you talk about our net income, which is a 2.4 billion net income, it tripled compared to prior year. And this has obviously, number one, it's the growth in our conversion due to our growth across all businesses. They did extremely well. And we had also a price increase in certain areas. This is another element. But the other element is a very, very strong and stringent portfolio management. Remember, we sold Flender, we made the closing, and this was an extraordinary gain of 900 million, which supported our bottom line as well.
If you say of course, the business is going very well across the board. We're seeing that in the numbers. But if you look at the year, you're also hiking your guidance. Where are the pros and cons for more growth to come?
Well, we increased our guidance indeed. On the top line, we increased it to 9 to 11% now. And on the bottom line, net income, we increased it from 5 to 5.5 to now 5.7 to 6.2 billion euros. And this is obviously supported by the very strong first half year, but we also see that the momentum is going on. We don't see the extraordinary gains which we had now in Q2 in the second half, but we believe that the business, which was really supported by all regions, we see really momentum from the regions coming, that this momentum keeps on going, and this gave us the confidence that we can go for a higher guidance for the full fiscal year.
Your business is already doing very well, but do you think there's pent-up demand for any of your products once the crisis is more or less contained?
Well, what we do see is that the crisis is really an accelerator of trends which we identified before. And these trends are definitively all about automation and digitalization, but also energy efficiency, obviously. So we believe that this keeps on going because customers realize that with automation, with digitalization, combining the digital and the real world, they can really drive their productivity. They can have a much more resilient way of running their business, also in difficult times. And this momentum, we believe, keeps on going. So we have a strong hope and strong belief that we see our customers adapting faster, making their digital transformation, and we are, unlike any other company in the world, ideally positioned with our portfolio to support our customers here.
If you're saying you're growing across all regions and across all product lines, but still, if you look at the profitability of your product lines, for example, mobility is lacking behind. Are you planning on having more cost cuts there in order to increase profitability, or what are your plans for mobility?
So let me start in saying that mobility is a champion in their market. There's no other company in this market which has a higher profitability than mobility. So we are very happy with the development of mobility too, because it's very resilient, it's anti-cyclic, it has a very, very strong growth momentum from the market. You don't see that in our Q2 results. Order intake is a little bit down, but this is a push-out effect, and the growth keeps on going. So therefore, we are quite happy. And it's also a very capital efficient business. So ROCE is accretive to Siemens. And but at the same time, we are indeed working also on our profitability to develop it going forward. And is our cost programs, getting on conformance costs down, but also, of course, taking conversion from higher growth rates. We're also shaping our portfolio. We gear it for more service, more digital service, and deploying digital technologies also to our business. This brings our margin up. So therefore, we are quite happy with our mobility business too.